Boom! What's going on, guys? Welcome into your Energy News Beat, episode number 151 here on this gorgeous Tuesday, November 3rd, 2020. Get out and vote if you haven't done that. It's election day here in the U.S., and we are coming to you from an undisclosed location here in Denver, Colorado. As always, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
Yeah, it's a beautiful day in the neighborhood, and let's get ready to rumble.
We've got a great show for you guys lined up. I mean, hopefully, if you haven't voted yet, please get out and do that. But, speaking of voting, I think a lot of people thought the markets were going to be in absolute flux. Markets rise today. We'll cover everything that's happening there. We've got a couple earnings that dropped: Diamondback, Baytex, CDEV, Williams, Baker Hughes getting into the renewable carbon capture space. We'll cover that. Stu's got stuff in the international news desk. But first, guys, just subscribe to this podcast and this YouTube page, Oil and Gas 360 on YouTube. Subscribe, turn notifications on, do whatever makes the algorithms go nuts. We really appreciate all the support we're getting. As the U.S. goes to the polls today, I think a lot of people were expecting the sentiment these last 2 days to be fairly negative, but it hasn't been the case. Markets actually ripped today. SPY up 1.7 percentage point, Nasdaq 1.6, Dow Jones up 1.9%, with a lot of the big tech names and the big brand names up over 4 percentage points on that side. What's crazy is, so not only is the election, this is one of the more contentious elections we've ever had. I'm comfortable saying that sentiment doesn't look is generally a bearish factor for the market. Also, the fact that COVID-19 cases have risen to 83,000, which are 20% higher than last week. And if you remember, last week we were talking 5-week averages were above. So cases, which is what really has been driving the market, have been going, but the fundamentals seem bearish. Markets continue to rip higher. Might as well get in on it. Crude futures, speaking of this, they're up to $37.83 after being down as low as $34 last week. Finishing last week, they're up now to $2, or up 2.7 percentage points off the back of another 550,000 barrels. Remember, it was 800,000 barrels from Libya. I saw a report this morning, Stu. It's 850. It's just so much more oil than we thought. But who cares? Markets rip. $37.83 for crude. I can't believe I'm excited to see $37. We're trending in the right direction. 12-month strip, $40.85. Natural gas doesn't have itself that good of a day. They're down 5 percentage points. It's just getting flat warmer, people, and all this production's coming back online from Hurricane Zeta. Remember, it's about 25% of natural gas production was offline. Well, a lot of that stuff, unfortunately, is coming down right now. Back into the curve, 307. That's down 2 percentage points. XOP finishes basically flat, down about 0.75 of a percentage point, 41.80. OIH, which are oil field services, that was down about 1.5%, or up about 1.5%, which was nice. $1.30. Market really liked that Baker Hughes news that came out. On the downside for equities, though, couple big movers. Southwestern down 5 percentage points. Northern down 4 percentage points. Arch down 4 percentage points. VOC, they're down 10 percentage points. On the upside, decent numbers are natural gas friends over at Goodrich. They're up big, 9 percentage points. $10.66. Contura Energy, they're up 9 percentage points. New Concept Energy up 13 percentage points. Before we hand it over to the international news deck, guys, I need to tell you about Data Gumbo. This show is now sponsored by them, and we really appreciate their support, guys. Data Gumbo is an award-winning technology with customers all around the world who build, manage, and automate their own smart contracts. Data Gumbo offers smart contract offerings as a new approach to the commercial relationship, one that reduces friction to deliver streamlined operations, transactional certainty, and cost savings along the line. It's all powered via their government note, guys. Check them out, datagumbo.com. Stu, what do you have on the international news desk today?
I'll tell you what, we got some news today, man. OPEC's Algeria backs and Russia ponders. Algeria came out in support of deferring the planned increases of OPEC Plus, but the problem is OPEC Plus is the presidency. Algeria holds the presidency of OPEC Plus, and they're now saying we don't want to do that. Yeah. So Russia is scheduled to reduce 7.7 million barrels per day. I don't know that they're going to be able to even enforce that. So Saudi Energy Minister Prince bin Salem said, "We will not dodge our responsibilities. We like him." Next one, going around the corner, we have Shell is divesting 8 refineries from their portfolio. They are all about getting rid of their downstream.
I love a comment we got on Twitter Shorter message. We're selling stuff. That's a shorter press release than they ran. I loved it.
Oh, absolutely. And bring your kid to work today at a chemical plant, a chemical playground. Okay, that was another Twitter comment. But the refineries are based in Deer Park, Texas, Norco, Louisiana, the Netherlands, Singapore, Germany, and Scotford, and that is following right along in their plans. The third story we have, Michael, is an amazing one. The company to watch, Saudi Aramco.
They dropped earnings. We've got some international earnings. I'm excited. You want to talk about big numbers.
I really respect the Saudi Aramco folks. They are doing it right. And we'll talk about that later. We've been following them on the news desk for a long time. Let me give you a couple bullet points. 11 billion profit, 11.8 for the third quarter. What's a few billion between friends, Michael? This is half the level, but 78% higher than the 3 previous months. That's a big number. That part of that is because of the $43 a barrel from July to September is the average. And in the previous 3 months, it was $23.4 a barrel. They also delivered 12.4 billion in free cash flow. Holy smokes, Batman! That's a lot of free cash flow.
What was it? 18 billion in dividends.
Yes. Isn't that amazing?
So even the big boys are borrowing for dividends. It's the same story, bigger play.
Oh, absolutely. And we're going to be following Saudi Aramco's management plan as they go compared to BP, Shell, and Chevron. We're on it. All right, back to you, man.
No, it's I love looking at Saudi Aramco earnings because we're about to run Diamondback. They did 61 million of dividends returned, but that's million. We're talking about billions of dividends returned. So it's pretty funny to see. Before we get into, like I mentioned, we've got some earnings to drop first. Baker Hughes getting in on the renewable energy space, acquiring carbon capture company Compact Carbon Ventures. Give you guys an idea. C3, this is the company called C3. Their technology differs from the traditional carbon capture solvent-based solutions by using rotating beds instead of static columns, which effectively distributes a bunch of the solvents away. I'm not a scientist, so I'm not going to pretend to understand anything that was. Point is, guys, it's sweet. Baker Hughes is in on it. We've been covering this on the news show every day. ESG is becoming huge. And oilfield service is primed to become a technology leader. I love it when they reach out to this because really E&Ps suck at technology. If you're an E&P operator, get out of the tech business. You're not good at it. You're not even hire somebody who's good at it. I think oilfield service is primed to do this. I love this deal. All right, let's move over into earnings. We've got Fang, Baytex, CDEV, and Williams. This kind of gives a good, decent highlight. Let's start with Diamondback Energy. How did the street like it? They're trading at 28.12. That's about a 1.5% increase. I mean, it's a decent quarter from delivered at 61 million in true free cash, they're sitting on about 16 million in free cash, which is really nice. They did about 200 million in what they consider. Well, let's just go ahead and read here. We'll tell you what they got. The cash, what they're telling you, non-GAAP cash flow, 524 million. So actual operating free cash workflow is about 200 million, which is well above the guidance, which they were looking at 153. So that's partly why the street really liked it there. Other thing, they declared a 35-cent cash or 37.5 cash dividend, which is about 61 million, which is a pretty good return in this environment, not cutting it and not having to necessarily dip into debt. That's, we mentioned Saudi Aramco dipping into debt to pay for the dividend. Not the case in this. So good to see there. Our friends over at Baytex, good quarter for them. It's nice to see some wins here in this. A lot of these earnings have been terrible. Street really like their earnings. They're up 4.4 percentage points, currently trading about 34 cents right now. They delivered about 60 million in free cash flow and have increased their financial liquidity to $344 million. This is really good, guys. These are a small cap company. I told you guys 34 cents a share. So 60 million in free cash flow is really good. But also here's this. They've updated their guidance. Guess what, guys? Their bank, they've extended the maturity of their bank and credit lines to April 2020. Big win for them. No revision in their guidance. They've redeemed 2 series of unsecured notes at 400 due in 2021. Boom, off the market. And a 300 million due in 2022. So they're cleaning up debt. Really nice. Obviously why the street likes it. They're up nice. CDEV, not good, guys. They're down 3.1 percentage points. Guys, give you an idea. They were down about stocks down about 7% for the open, but they were down today about 4 percentage points at about 2 p.m. Eastern time here as we're closing up here. The company lost about 19 cents a share. Revenues were off by 35%. So, things just keep getting worse for CDEV, who, as you guys remember, co-founder of EOG, Mark Papa, was the guy that started that. They were actually acquired by a SPAC. If you go back into it, CDEV was actually a SPAC before this. So and I'll talk about all some of those special purpose acquisition companies. This was an original version of that. I think only time will tell where this company goes. Williams, guys, we've been preaching this on the news desk for a while. Midstream infrastructure is the only thing that makes money. Guys, give you an idea. In 2019, 220 million of GAAP income for Williams. In 2020, 308. Holy smokes. Able to increase revenue in COVID year to year, guys. Unbelievable. Non-GAAP measures look good, guys. They did about 1.6 billion in adjusted EBITDA. So numbers look good for Williams. Street like it. They're up 1.2 percentage point. Physical pipelines, guys. If you can get your hands on physical infrastructure, nice. It's partly why I like the Synovus deal. I'm willing to give up good upstream value in order to acquire some downstream and some midstream assets. And that's partly why I was bullish on that. And I think sort of this plays out. These midstream companies, man, these earnings, they just, nothing can hurt them. They're just big. They're bulletproof, baby. Stu, we miss anything today?
No, we're just thrilled to have our Powered by Data Gumbo. They're good people.
Yeah, no, we really like those guys over there. Check everything out, datagumbo.com. Also, check everything out for the Energy Newsbeat at the world's greatest website, oilandgas360.com. We're going to let you get out of here. Vote if you need to, but let you get out of here. Get back to work. Thank you for checking us out on the Oil and Gas 360 Network. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow.